only asset in the world that is offsetting the monetary printing. It's not gold, it's Bitcoin. Bitcoin has not only offset the monetary printing, but massively outperformed it. One other asset has, which is the NASDAQ after 2008. But Bitcoin is the one thing that is outperforming the Fed balance sheet. And that means that it is offsetting the debasement of currency. Once I realized that, and that Bitcoin was going to be the supermassive black hole that eats all other asset classes, I just realized there was no point doing anything else.
Raoul Pal, a highly respected macro analyst and the founder of Global Macro Investor, offers critical insights into navigating the complex world of global macro events and their impact on financial markets. His firm employs a global macro strategy approach, focusing on interpreting and anticipating significant macroeconomic events, including major geopolitical shifts, escalating global debts, heightened international tensions, and a rapidly intensifying global liquidity crisis. In these uncertain times, understanding the macro perspective is crucial before making significant financial decisions. Raoul Pal believes that Bitcoin, the world's largest cryptocurrency, will play a pivotal role in the emerging global economy and financial landscape. He envisions a new era on the horizon that will reshape markets, economics, and society as we know it, with Bitcoin serving as the cornerstone for building a new financial system. Moreover, he points out that the relentless global debt spiral practically necessitates governments to continue printing money indefinitely until the existing financial system collapses, leading to a complete financial reset. In this context, Bitcoin stands out as one of the few assets that have consistently outperformed the Federal Reserve's balance sheet, particularly following rounds of quantitative easing measures initiated after the 2008 global financial crisis. In addition, Raoul Pal highlights that Bitcoin's performance tends to correlate positively with the extent of monetary expansion announced by major central banks, indicating that as central banks increase money supply and announce more quantitative easing measures, Bitcoin tends to outperform not only the Fed's balance sheet, which directly relates to currency devaluation, but also other asset classes like stocks, bonds, and real estate. In the following clips from one of Raoul Pal's video broadcasts, he vividly illustrates the broader landscape of money printing, rising debts, the inexorable shift towards government-controlled digital currencies, and Bitcoin's central role in the new era of global finance.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I want to give you the big picture, the really big picture, where I think everything is going, and it's obviously mainly about the digital asset space, because I think it's the single most important thing for everybody to understand. And in order to do that, I'm going to give you my journey of discovery so you can piece together some of what I've learned on my way, because there are many narratives you've heard me speak about, but I haven't really put the whole lot together to give somebody or all of you something really meaty to get your heads around. Now, again, you don't need to agree with all of it, but I want to show you my journey, how I got here, what I think is going on in the macro backdrop, what I think this means and why I chose Bitcoin and then cryptocurrencies, why I diversified, what I think the actual space is really headed, and where this whole thing is going and how it fits in to the future of everything. Let's go back to the beginning. So 2008 was a period, in fact, I'm going to go back to 2000. 2000, we started to see the debt bubble increase and the rise of central banks. So Alan Greenspan back in 87 was the first one to start using interest rates really to stabilize markets. That became modus operandi by 1998 when long-term capital blew up. The Fed did it again under Greenspan. Then 2000 we had the stock market crash and the recession. And again, interest rates were used heavily. Now, the money illusion meant that lower interest rates, people thought, I'm going to take on more debt. So they took on more and more debt. And that led to the housing bubble, as we know. And then that blew up and almost brought down the world's financial system. Now, I was in Spain at the time. I'd left the hedge fund industry, but I was still writing, as I do today, Global Macro Investor. And I realized that the fragility of the system was now becoming the most urgent thing, and that after 2008, we hadn't really solved it. In fact, it was bloody clear by the time we got into the European crisis in 2012 that it was not solved at all, and debt was the big issue. And the only answer at this stage became the printing of money. because there was no other way to deal with it. It had become too big, too gigantic, too scary, too dangerous for anybody to let the fire burn. The whole Austrian economic idea of creative destruction was now almost impossible to implement because the destruction would have been total and complete. But after 2012, I wanted to make sure that there was a way out. Now, that was the first time I wrote an article. I think it was about 2013. I wrote an article called the Life Raft, where I talked about gold and, in fact, Bitcoin. I had started to have Bitcoin on my radar screen as some good friends of mine, some Global Macro Investor members, had been involved in early days. I was going to set up the world's safest bank. That was the idea. A bank that only held US treasuries, and that any money on deposit was entirely matched by treasuries that were held at the Fed. No rehypothecation, no nothing. So it was kind of a bank outside the banking system. I had that idea, but it was bloody hard to set up a bank. You know, people like Caitlin Long, I'm good on you. It's really hard to do. So I was running around the world looking at this idea, and the Bitcoin idea came to me from Emil Woods. And Emil said to me, listen, this might be your answer. And I had seen it and looked at it, and it was very interesting. In 2013, I bought it. It went up 100% in a month, and I sold it. And I was like, wow, okay, what was that? I wrote an article in 2013 or 14 about the stock to flow of Bitcoin, looking at it versus gold, and saying with gold at about $1,300, where it was at the time, I would impute roughly, without the great maths that my friend Plan B has managed to do, but I had a rough rule of thumb that Bitcoin was probably worth $1 million in comparable terms, using stock to flow, you know, how much gold was underground, how much gold was being mined, etc., and back imputing into the Bitcoin price. And that gave us a macro framework, and that macro framework became quite well known at the time and got passed around and got many people into the space, actually. Then I was out of the space for a while, then got back in around 2015, 16, and I started buying again, probably around 200. And I think I sold out early when the forks were happening.
During his broadcast, Raoul Pal delves into the growing convergence between Bitcoin, cryptocurrency, and macroeconomics, a concept that has gained traction even among the most steadfast proponents of traditional finance within the cryptocurrency industry. In contrast to the initial wave of cryptocurrency participants, macro experts with a background in traditional finance, such as Pal, contend that Bitcoin cannot be analyzed in isolation from macroeconomic factors. Despite its impressive attributes and foundational strengths, Bitcoin remains susceptible to external influences, including inflation, deflation, economic recessions, broad monetary supply dynamics, and other variables that affect price movements in various asset classes. This perspective holds true until Bitcoin reaches full maturity and garners broader acceptance in the global financial landscape as the transition to a new era of finance unfolds. In the meantime, as Bitcoin approaches maturity and the world gradually transitions, Raoul Pal expresses unwavering confidence that Bitcoin will sustain perpetual growth and consistently outperform all other asset classes. Here are additional excerpts from the video where Pal delves deeper into these themes.
I had always said that crypto, and Bitcoin in particular, and macro were the same thing. They just didn't know it yet. And most participants didn't know it and didn't understand it. Crypto came from a different community. It came from a community of developers, the kind of cypherpunks. It came from Austrian economic school kind of philosophy. It came from libertarian philosophy. It came from a number of different things, but it started to attract the attention of finance people, particularly the macro guys like myself. You know, our job is to find assets that best represent our views and where we are in the world. And we are all, without question, troubled by the debt supercycle and how this all plays out. So when we saw Bitcoin, you know, one by one, people moved across. Famously, Dan Morehead was first. And then a lot of people, whether it was John Burbank, Mark Yusko, whether it was Dan Tapiero, whether it was myself, Mike Novogratz, I mean, bit by bit, everybody from the macro world, Stan Druckenmiller, Paul Tudor Jones, Alan Howard, you name it, they're all moving across because they've seen the magnitude of the opportunity, because we all knew that they weren't parallel paths, they were convergent paths. But it's the macro backdrop of that is very important to understand, because within this, the only answer was the creation of more money. And that creation of more money was clearly going to be very, very beneficial to Bitcoin because it was basically created for this. And I pointed out early on, back in March and April, that Bitcoin was two things. It was this store of value narrative. And it also had a call option on the future. And I started developing some big meta-narratives to help get people across the line because I know it's a scary, different world and people don't want to understand this weird digital money. I don't want to throw money at this. But I tried to explain to people in simple terms things like pristine collateral, how this is superior than many things that we have in the existing system, or in fact, all of the things that we have, how it acts differently, how you can't create more of it so as collateral it's worth more, and therefore is a better foundation stone for the financial system of the future, and how as a store of value, it offsets the monetary printing, and how this could all transition into a future economic system that had incredible value. And that's what made me irresponsibly long. The next part of it that I think was maybe the light bulb moment for many was my new Bretton Woods, the Bitcoin Life Raft piece. And that essentially was saying that, okay, what also is coming is the central banks have seen this digitalization of money and they want to be involved. And they want to be involved by creating central bank digital currency, not as a competitor to Bitcoin, but as an ancillary agent within this new digital money system. And that's all well and good. That's basically government stablecoins. Fine, I get it. It's much better. It works really well. But it also has other qualities, because the other qualities are it's programmable. So essentially, central banks can program money so we all have different monetary policy or different tax regimes or whatever it may be. The point being is behavioral economics is going to shoehorn its way in to monetary and fiscal policy, which are combining. And at that point, we are really beholden to what central banks do. Can they destroy money? Can they destroy our capital, our savings? Of course they can. And we needed a life raft. And Bitcoin was going to be it.
Much like every other advocate for sound money, Raoul Pal strongly believes that the world urgently requires a new financial system. This system would be rooted in governments continually resorting to printing more currency as a solution for recurring economic recessions or collapses. If the existing system persists, characterized by the escalating debt burden, it's merely a matter of time before even a powerhouse like the United States experiences a scenario reminiscent of Venezuela. In such a scenario, asset prices may appear to rise quickly in dollar terms, but they fail to outpace the rate of currency devaluation. There is a clear trajectory pointing in this direction, and Bitcoin was purposefully designed to address this impending issue. Over the past 14 years, Bitcoin has demonstrated remarkable resilience, with the ability to withstand adversities and serve as a means to preserve and grow wealth over time. The question posed is whether you share Raoul Pal's views as presented in his video. Do you also believe that Bitcoin will endure the current era and any impending crises, ultimately serving as the cornerstone for a new era of global finance? We welcome your thoughts and comments on this matter in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.